Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market with the previous week using the technical charts and try to learn something from it and plan for a better trade for the upcoming week. And this is starting on July 17, Monday, tomorrow, 2023. Let's get the charts. Before that, if you are not subscribed, please subscribe right away and share to your friends and colleagues. Appreciate your help and support. Thanks. Here we go. The weekly charts are showing extreme bullishness. Wide range bullish candle is seen on the Nifty, and the Banknifty is divergent. It's indecisive, small body, looks like a spinning top after previous week's gravestone dodge, which is bearish. So this candle is both together. If you see, it's indicating further bearishness, but at the same time it's at a support zone where there is a single priority bounce is possible. But Nifty, you can see that it is absolutely broken out and continue the channel with gap ups on a weekly candle basis, right? So extreme bullishness on one side, some pause in the breakout, some indecisiveness at a support zone on the Banknifty. That's how it is. In daily charts, you can see that it's wide range bullish candle again on the Nifty on the Friday, while on Banknifty it's indecisive again, very volatile and looks like a reversal wick. Potential reversal week, and it's somebody, so therefore it's indecisive on the daily hours. You can see that it's the last 6 days has been red candles only, and that white range red candle. So clear consolidation, retracement, pullback, and a pause in the rally is very much evident in the Banknifty, but absolutely non-sharp rallies in the Banknifty. Daily basis, you can see there is some retracement that happened previous week also in the Nifty also, but finally the week ended up with a new all-time high that was made on the Nifty as well, near to almost very close to the 9600. So let's just summarize it at numbers. 235 points up, on 0.22% up on Nifty, forming a wide range candle. New all-time highs, very close to 9600, and Banknifty is around 6 points down, actually 0.26 on a weekly basis. Small body, looks like a spinning top, okay? And spinning top on the top could be an indication for reversal. So there is a possibility of a reversal if it is confirmed. If the price moves above the spinning top, previous week's candles low, then we have trouble. Right? Remember, previous week also was gravestone dodge in this year, so indecisiveness in the Banknifty is indicative of a bearish and potential reverse, but it's support zone. That's what it is. Remember, we had broken out of a cup and handle pattern as well as a flag pattern. Look at this. It's a flag pattern. The dotted lines is a flag. Right? You can see that in both the dice, and a cup rounding, whatever we call it. Cup and handle, dotted lines again. Cup and a handle on both the dice, and a breakout. Absolute clear breakout bullishness is what you see there. And in between all this is happening, right? One is diverging with the other, right? But absolute bullishness is there, it's still there in the arrow. There's a possibility of the Banknifty also taking support at its current zones, or tracing a little more and taking further support, and Nifty also consolidating or pulling back a little bit now that it continuously moved a lot, right? It's nearly 16 to 18% of rally that has happened. So there could be some consolidation that can come in while the Banknifty joins. That's what it looks like. So all the bands also indicate bullishness only, because it's fallen off from the walking on the band top, but still expansion is on the upside in both. And as some beginning of consolidation is there on the Banknifty, you can see that. Right, Banknifty has bent slightly, so there is a beginning of a consolidation. So. But overall it's expanding, it's still expanding on the upside, and the bias is bullish because it's above the 20 exponential moving average, 20 daily moving average, which is the median of the Bollinger Bands on the daily charts. So bullishness indicative mostly on Nifty. Some sideways consolidation continuation is indicative of on the Banknifty. This is another look at the support resistance levels. Basically, the previous swing lows in the April on the July 2022 is the swing low. From there, if you see, you can see that it's well within a channel. And if you draw a Fibonacci extension, you can see that it is hit and broken out of the 61% extension levels. And if you look at Fibonacci retracement level, you can see that it could stop at these levels. About 23.6 retracement is 36 is 50 or so. Retracement, these are the levels that you can budget. Same with Banknifty also. It's well within a parallel channel, a trend line channel. So we'll watch out for the price to move. So the 61 retracement of 51 Fibonacci extension is not touched yet. It's not broken about. Anything above 61%, upside or downside means a breakout or breakdown, right? So that has not happened in Banknifty. So Banknifty, if it breaks out, the 61 would be taken out, and then it could be big, even bigger, probably reaching the 20k and beyond in the Nifty, and 46k and beyond in the Banknifty. So that possibilities are there. That's how we project the price levels ahead using Fibonacci extensions. That's exactly what you see from the previous swing low to the recent swing high end retracement, and then from there we extend upside. So this is the same. We can see that there's a gap support that is there in the Nifty. A lot of gap support zones there. Moving average 20, 50, 100, all the supports are there. So it's a breakout in progress. Nothing to worry as of now. But just get the numbers for the support resistances are there. So all-time highs 19,600 nearby zones, 595 to be precise. 20 exponential moving average is 19,200. Before that you have 19,300, which is a very good support, right? Then it's a gap support that's seen at 90,000 nearby zones, and also at 19,200 also it's a gap support. So previous support, so till 1900 you have a lot of supports, 19,300, 19,200, 19,170, 19,000, all this is support, and after that it's breaking 18,887, 18,777, 18,763, 18,696 likewise supports again. 18,763 is a 100 exponential moving average support. So above upside projection we already seen where it is. Since this could come out. Now looking at the Banknifty, it's had a support. It has taken a support from the 20 exponential moving average. We have seen that at 44,550 levels it is bounced up and then more. At 44,844 would be the first. Its further resistance will be in the, after that all-time high 45,655 would be the resistance. After that downside supports would be, first would be breaching of the 44,554, that's a 20 exponential average. After that you have 44,500 zones and 44,151, 43,944, then 43,592, 43,567. So all the colored lines are the 20 exponential moving average, 50 exponential, 100, 200. 200 is way down at 43,000. So so clear. It's at a clear zone of support. Pull back with the consecutive 6 red candles on the way has been seen in the last 2 weeks in the Banknifty. Now it's support. It may consolidate here for some time, like the Bollinger was showing slightly. Meanwhile, Nifty also, this is Banknifty actually. Meanwhile, the Nifty also may retrace a little bit towards the 20 exponential moving average, and by the time Banknifty will catch up and move upside is what we can see. So it's levels for the support and resistance that we can see. Now moving ahead, analyzing the momentum and the trend of the indices, you can see the weekly charts of the Nifty and the Banknifty is what you see on the left side. Daily charts is what you see on the right side. So it's weekly, it's clear bounce of range shift for the momentum concept on both indices, and it's rising up, bullish momentum for sure. Daily Banknifty is slightly slipping the sideways, you can see, but Nifty is intact. So this is a summary of the trend momentum game. It's bullish on the Banknifty still on medium term and short term. Banknifty still bullish on the medium term, but slips slightly into the sideways momentum, but it's a rising momentum. Trend indicator, it's ADX, it's DMI positive, bullish and rising. Bullish and falling is only difference in the case of Banknifty. So it's there's a mistake here. It's actually not right? It's actually not negative negative, it's DMA positive. So overall trend is intact bullish, but there is a slight fall in the trend has happened in the case of Banknifty. Similarly, momentum is intact, but slight slip of momentum to the sideways one has happened on the Banknifty. We had volatility in the opportunity analysis. VIX cool-off has happened for 8%. It's now at 10.68 is low volatility regime, lowest volatility regime zone. So now it is at the lowest level. There is very good chance of introverting VIX to spike up huge, 20% up to 25 probably. So that could be indicative of a big crash. So you have to be very cautious when the VIX is at the very bottom. But having said that, it can remain at that very bottom level and remain there for very long time. That we never know when. But the spikes, when it suddenly happens from the zone, it will be really big in the case when it is below 11 historically, if you see. So it is a big cool off. Which is cool means fear and greed is less. Now up and does not, if you analyze the Nifty showing long build up, a long unwinding, it's contrary. Nifty showing long unwinding and bearishness is what you see in the Nifty. So that's the contradiction that you are seeing this week. Up and result for the July 20th expiry, weekly expiry, shows that there is bullish in absolute bullishness on the Nifty is 1.23, but Banknifty is not yet bullish, not at above 1.82, not bullish enough, you would say, but still bullish. Right, so that's what open interest data for the options weekly expiry for the next July 20th is showing. But futures are showing that it's long built up, so bullish. So there is contrary view there. Right, so Banknifty is slightly weak is what you can understand from the open interest. Now options why levels is an indicator. Nifty is having some resistance huge that's dominating. You can see that right side, left side. Banknifty showing that resistance dominating, and Nifty showing that support dominating. 9600 is where it is priced, but the highest supports are seen at 19500 and 19400. But highest resistances are seen. That means the call writing is seen at 9600 and then at 20,000. Banknifty 43,000 and 44,000 is where the highest put writing is seen, and 45,000 and 45,200 is where the highest call writing is seen. So there is a big range of 43,000 and 45,000 with the highest put and call write. So it's a very wide range. So people expect, the option writers are expecting that there could be big volatile movements that could happen in that range. But Banknifty case, it is very thin and narrow. Option writers are bullish. Mostly 19,500 and 19,600 is very narrow, very thin. So that's what it indicates. The next would be to analyze the industrial sectors, with the various major industrial sectors. Now, the very positive thing that you can see is after a very long time, you're seeing that all the sectors, all the major sectors that we track, every week, IT sector, metal sector, auto sector, pharma sector, FMCG, reality, all of the sector at a stretch is all bullish on both the time frames, weekly as well as the daily time frames. That bullish, right? Look at this IT sector. So any of the sectors, we can engage into a long to take long push. This is what that happens very. Not very often, unless the market is trending up and bullish, absolutely bullish, only then it normally happens. So IT sector is 4.7%, 75% of metal is 3% of, auto is 0.5% of, metal is auto is the one that is least moved last week because it had already run up a lot. Pharma is 1.3% up, FMCG is 0.8%. These are all sectors that were already leading the first phase. Reality 1.5%. So the big breakout happened in the IT, the middle sectors, which was lagging. So across the sector bullish move is what you can see there. Right, look at this. And all the sectors are in the bull zones as far as the momentum is concerned. And you can see the top is the IT sector. It is in the brim of a breakout. If there is a breakout that's happening from this consolidation zone, then can be really big, but you have the gap there, up there you have the gap, so cautious on that. Corner left down, you have the metal indicator, the metal index, which is also pricing up towards the all-time high once again after a long retracement. And auto has already broken out weeks back and dodgy indecision. So all the sectors which was earlier doing good, auto, FMCG, pharma, so all doing good earlier also. So They're slightly indecisive and have small bodies, but they're already broken out. They're bullish in all time frames from the momentum perspective. Farmhouse has broken out of the trend line and is bullish and then heading towards the all-time highs. FMCG is in a parallel channel, heading high, has hit the top of the trend as a parallel channel, and then probably it's consolidating before deciding what to do next. But the momentum is absolutely bullish. Realty sector also has broken out and very close to all-time highs. Momentum bullish on both time frames. So across sector bullish move. Once again, I'm reiterating that fact. Now we have one missing. HDFC is no longer a trader, right? So it's getting merged, and HDFC Bank becomes a huge contributor to the index largest. You can see that it's it's in the bear zones. It has not broken out. We received the resistance multiple times, and then in that exact zone, and it remains to be like that sideways, right? So regardless, it is having a flag and pole, and breakout is possible, and if it happens, it will be really big. So make it stopped out multiple times, maybe worth taking the bet, or we'll have to wait patiently before that. Have a green candle above that all-time highs or above this congestion zone. So sideways momentum, consolidating is what is happening with HDFC, the largest index contributor. Now Reliance, big moves are happening. It is again consolidating in the weekly charts. If you're seeing zigzagging within a range, rectangular or box, breakout could happen. So if that happens, it could be really big. It could be as much as the height of this consolidation zone. So, or it could also happen that it may end and then go the downside move. So either of that could happen. But the momentum is going to the bullish zones in the medium term after a while. So Reliance is bullish, but it is the crucial point of breakout. You have to keep a close watch. It will take some time. If you consolidate some before some time here, take some time to take out this. You never know. Or it may reverse to the back to square one. So all these possibilities are there. Keep a close watch on Reliance with second highest contributor. Now third one, ICICI Bank has actually broken out of that all-time high zones, and then cup and handle formation is clearly visible within a ascending wedge. Momentum is rising up, bullish. Absolute bullishness has come back, but it seems to be at the top. Some congestion is there. Candles are not moving higher low yet. So once that happens, then we can ride the trend. Yeah, the IT stocks left, Infy and TCS on the left side. You can have seen that now it has taken out. Not exactly taken out. Yeah, one of the gaps has been climbed, but not conquered yet, because the gap. One of the gaps is conquered. I know you have multiple gaps up there as resistances, and until 1749 is taken out, you'll have a rough ride. But look at this week's candle process. It's really wide range, and it's absolutely bullish. Momentum is yet to climb into that bullish zone from the momentum perspective. On the medium term, it has not happened. Still rising sideways. Once that happens, it can easily move up. Now TCS also has, once again, after having retraced from the trend line, now is trying to break out and wide range bullish, big mega moves. Momentum also has caught up and already climbed the bullish zones on both the medium term and daily charts, and that wide range bullishness probably gives an indication that the pullback is over, and now it's time for breakouts or reversals from the downside too. This was a sector that was beaten down, and these are the two index heavyweights that contributes a lot to the index, and this beaten down, when it moves, it takes the index up there. That's what has happened last week. Kodak Mahindra has been a contrast stock. It has been zigzagging in this range. It's range bound. Now it's downward, halted in between. Momentum is sideways. So it has always been sideways, right? Moving within this range, either up or down. Now the new stock that I have included in the in the tracking of the top contributing heavyweight stocks is the ITC. It's 4% plus of weightage is there for that, but ITC, you can see that it is already doing a spectacular performance since a very long time. The price has doubled in the last 1 year or so, and momentum is absolutely bullish, and then having divergence is also bullish nature. and once it goes above this, there is every likelihood that it can go above this. What I have drawn is a Fibonacci extension, so it is still below the 60% of Fibonacci extension. So long way to further go up, it can definitely hit the 500 for sure. So bullish momentum, bullish trend, absolutely no doubt. So ITC, excellent Nifty contributor. Axis Bank, excellent. Reliance also doing okay, doing good. HDFC yet to do good. IT stocks has come back to support the index, and Kodak Bank as usual sideways, up down. Now the next is the institutional participation that we are talking about, right? Interestingly, the Fyers are once again buying. Last week also 5,400 crores of buying in the cash market has happened. Domestic institutions have been selling 1,251 crores of selling has happened. Their profit booking basically. Right? So institutional support. The foreign money is flowing inside is what is keeping the market up there, and that continues, which is very positive. The derivative side of the Fyers net longs have moved down last week, which is happened. We had trying to understand the global markets, the global currencies, and the various currencies and other commodities. Let's look at the currencies first. Now, there is some big thing that has happened. Look at the white rich bearish candle. Momentum has dipped into the bearish zone. So that's the US dollar index. So dollar has weakened suddenly. Yes, it has fallen down from that major support zone, and there is head and shoulder pattern there. There is a pretty likelihood that it can go to 94 kind of levels. It's within a cup and handle. So candle bottom also is at 94.3 levels. So that's big thing that happened. 2.3% of down move in the dollar index will happen. Although the USD INR and dollar is not directly coordinated, there will be some impact. So rupee has gained, USD INR has fallen 0.68% down, and that's 82.2. So basically it's a ascending wedge, and if that is breached, there is a big chance that it can go to the 80.4 kind of levels. So it is 82 as of now. Will it breach? You'll have to keep a close watch on the USD INR currency pair. But momentum is sideways, otherwise not bearish. Once it turns into bearish, then rupee is going to come back to the almighty. So that's a big thing that has happened in the currency market. Last week was crucial, the biggest fall of the recent times. Dollar index has dropped 2.3%. Crude oil has moved up 2% and 75.22, and it's within the parallel channel. It had very rarely climbed and stayed green above that median of the parallel channel. So this happened now. So be cautious. If now that there may be some correlation between the oil and the dollar. So dollar is coming down, so oil may go up slightly. As long as it stays within the parallel channel, it should be okay. But sideways action is what is happening. But as of now, at 75 levels, it's okay for the economic perspective. But some of the stocks like Reliance could be negative impact if it falls down. So it's possibly impacted if the crude oil price is rising up for the oil marketing companies. But economy having a crude that's rising up and the dollar also shooting up and remaining rupee weak, it's not that great. Now look at the gold. It's a cup handle, multiple cup patterns. All-time high is very close at 2083 kind of levels, and it attempted to take out that, failed miserably 3 or 4 times in the last 1 or 2 years. Now within the cup and handle, and once again climbing up, spiked up. How much percentage was that? It's 1.5% of up move has happened. Solid bullish wide range candle. Momentum is slightly crossed over, actually closed over into the bullish zones once again after a long time. So that's another thing that you have to be cautious. People are investing in the gold and looking for safer havens. That means there is a possibility that there is a fear in the market, that in the equity market, and maybe at the top and profit booking and fall down. People anticipate that. That's what it's indicating. Money is getting shifted to the gold. Gold was not ready to fall down after trying to attempting a few weeks back to hit the all-time high. Once again, it looks like it's giving another attempt. Right. So that's what gold is. Still sideways and rising, not a momentum perspective in the gold, right? US markets are green, right? Dow Jones 2.3% up, S&P 2.5% up, 3.6% up, Nasdaq. So absolutely big equal comeback is what has happened. Last week it was 2% down, now it's 2% up. Dow Jones, but momentum, you can see that there's resistance clearly seen there. Once it is still not climbed to the medium term bullish zone, so the momentum perspective, but there is an attempt to break out of that resistance. So it is at resistance still, but green across all the indices. Nasdaq, you see, it is almost broken out. And S&P 500 also solid green white range bullish candle with bullish momentum also on both this S&P 500 and the Nasdaq. So all right, resistance attempt to break out of the resistance is what is seen, which is good. And global mother market is right to break out. Now stock picks. Next week, two stock picks are Brokerage Realty and Coforge Limited, IT company. Brokerage Realty sector group, and it's a consolidation box pattern, rectangle pattern with volumes and momentum and trend. If that breakout, actually it's a green close above that, and if that persists, and we can have a good risk reward because it can go to the channel top. It's a long, good channel, parallel channel where the price is. So Realty, long call, Coforge is IT company. It's a cup pattern. Entry has to be if there is a price move go. Stop loss has been very time. Very good risk reward towards the all-time high. Volumes are good. Momentum is good. Trend is good. Coforge, NIT. It is old NIT Limited. So yeah, it's IT sector has come back. So there is a big chance that if it continues, that rally continues, then we can expect big moves. So to keep the stop losses tight. So Realty and Coforge Limited, long calls for next week. So another actionable, it can be seen from the payoff of the options. Nifty index weekly option strategy. It's nothing but a double diagonal counter spread, where you're selling the put and a call. The near month and the 4-month hedges are taken for that. Right. So when the VIX is spiking up, we get the additional advantage also. And since it is a very low level, there is a good chance that it can spike up. Then we will benefit because the decay will be slow. So probably a profit looks good. Profit depends on it. This is for one quantity. Right. As per your risk appetite and capacity, you should push in size and increase the lots. Right. The capital requirements are less because completely hedged. The range is very good. 19,300 and 19,800 is the range, which is very good. POP, property of lot is good. Only thing is, risk reward may not be that great, but just try to get out at 1 or 2% and have that constantly happen every week is what the strategy is all about. Double diagonal counter spread is what you see here. That's it. That's all about the strategies and analysis and all that. Let's just wrap up. Basically, there is a divergence between the indices. That's what the market is showing us. Nifty continue to move up relentlessly, and Banknifty continue to pause or retrace or pull back. Or continue the pause. So there is both indices, major indices, behave differently last week. So, but regardless of that, it's a cup or rounding pattern or flag pattern. Crucial breakout that has happened already, and the rally has extended to 16 to 18% of the indices. So it's an ongoing rally. There is a pause that has happened, a pause that has not yet happened on one of the indices, a pause has happened on the indices, which is the banking index. Now the medium term bullishness is intact, trend is intact. Fyers have continued to buy since several months now. Right. Big buying, big foreign money is coming in. No volatility regime, there is absolutely no fear and greed that's seen in the VIX having the lowest historic levels. US market is showing record item green, but demand still in the expansion more or less. Operating PCLs are bullish, more or less. And it's all giving the bulls even more hope. But remember the fact that the Banknifty has dropped in moment. It slipped to the side slightly in the daily charts. And it is yet to be bullish on the upper interest. 5 continuous red handles. Right? Industry is there, the weekly candles. Right? All this reminds us to be cautious. There could be a reverse that can come in. Right? And the VIX is also very historic lows. Even though the fear is less, historically we see whenever it is at the lowest of the lower levels, the spikes can be really big. That's also indicative of the possible for reversal or further retracement, pullbacks. All this got to be really cautious about. Profit booking could come when the market is at a all-time high levels of 9,600. So, but the view as per the charts and the momentum and all the indicators and the study that we have done, remains to be mild bullish itself. Retracements could come in, and Nifty may continue to consolidate. Pullbacks could happen on the Nifty after it has run up so much, and both may once again break out for the RiskReward. So until then, it may be consolidation, sideways movement that may happen, or violent consolidation it could be also. So I'll be cautious. The overall view is might be mild bullish view. Although in the initial days of the week may be pullbacks or consolidation. Eventually, the end of the week it may come back as bullish is what it looks like, because it's a big big bullish foreign money rally is what is exactly happening. Now global cues, Russian fears, inflation, interest rate, Fed hikes, and all these things could create big problems. So of course on the crude is remaining okay, but it remains weak, and if that gains more, then economy wise also it may be good for the market. So the range for the next week: 19,200, 19,800 for the Nifty, 43,500 to 45,500 for the Banknifty. Right. So as long as it's 19,000 and 44,000 the Banknifty, if they're held, then you can anticipate rally to continue after some consolidation maybe. Right. So as I always say, overnight risk never take without hedges. Have hedges and make use of non-direction if you're not sure of capturing the directional moves. Non-directional strategies are there available in the playlist. You can check that. You can use option strategies for making regular rental income using covered calls and cash ticket puts and all that. Link to the playlist, you can check out that. All these videos are there separately on that strategies. Always hedge your positions, and the position size less when the VIX is spiking up. Play it safe and have hedge positions, and try to invest using option strategies as well if you're interested. So that's what risk management is all that you have to be careful on. Right. The rest is have hedge and stop losses always. That's my view. Mild bullish view remains. Market is bullish, but you have to be cautious. Banknifty is showing some trouble. Right. It may be consolidating, it may be pausing. Nifty has run up a lot, so cautious on that. Right. But overall the trend is up. That's my view. Hope it helps you to have some clarity on what's happening. Right. If it has helped you in some way, please hit like, then share and comment and subscribe if you're not subscribed and watching this. Right. So if you're already subscribed, please share it to others. So we have very few subscriptions. Appreciate the help this work. We have a lot of social media handles there where we regularly post, and that may be analysis that may happen until the next week when we have a video on YouTube. So until then, all the chance postings will be in the social media, so subscribe to that if you're not already. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.